Shorting the dollar is gaining favor after Fed's great pivot. Betting against the dollar is growing in popularity after the Federal Reserve upended markets by signaling the end of its monetary tightening campaign. Non-commercial traders, a group that includes hedge funds, asset managers and other speculative market players, boosted their bearish bets on the greenback in the week ended Tuesday, according to CFTC data compiled by Bloomberg. More than 39,000 contracts are now tied to expectations the U.S. currency will fall, up more than 10,000 from a week ago when the Fed was preparing to meet, the data show. U.S. Dollar Outlook 2024, strong USD selling signal by month-end against all majors say Barclays year-end selling and Fed expectations drive further dollar losses. Euro to U.S. dollar exchange rate hits 4-month highs. The latest U.S. data releases reinforced expectations that the Federal Reserve will cut interest rates in the first quarter of 2024. With a bearish dollar narrative still in place, year-end position adjustment continued to push the currency lower. The euro to US dollar, exchange rate strengthened to 4-month highs above 1.1030. The pound to dollar, pound sterling to US dollar, exchange rate also strengthened to highs just above 1.2740. Goldman Sachs, pound sterling tipped at 1.35 versus dollar in 12 months. Goldman Sachs now expects that the pound will strengthen to 1.35 against the US dollar by the end of 2024. HSBC analysts, however, are forecasting that pound sterling to US dollar exchange rate will weaken to 1.18 by the third quarter of 2024. There was choppy pound sterling to US dollar trading during the week with net gains to above 1.2700 as the dollar lost ground. The UK data releases this week triggered a further shift in Bank of England interest rate expectations. The pound lost ground, but was rescued by a further slide in the US dollar amid expectations of deeper US rate cuts. Stronger risk conditions also helped underpin the UK currency in global markets. The headline UK inflation rate declined more sharply than expected to 3.9% for November from housing, inflation, interest rates and more, what to expect in the 2024 economy. That's the broad consensus for the economy among experts as we head into 2024. After a post-pandemic period that saw growth surpass most forecasts, but also spurred breakneck inflation, Americans should now expect a period of reduced business activity. Yet while some economists believe the risk of a recession will remain, others think a soft landing is more likely. That oft-talked-about scenario is understood as a combination of milder inflation alongside slow and steady employment growth. Pairs in focus this week: Australian dollar to US dollar to Japanese yen, S&P 500, oil, silver, gold, euro to US dollar, ETH/USD. The Australian dollar to US dollar had a strong rally during the past trading week, surpassing the 0.68 level. It's likely to aim for the 0.69 level, a zone with prior resistance and the 200-week EMA. Breaking above this could lead to a move towards 0.7150. The week's candlestick showed significant bullishness, and with growing attention on the possibility of the Federal Reserve reducing rates in 2024, it makes sense for the AUD to keep rising. Short-term setbacks may present buying opportunities, with support around 0.6650 and strong support at 0.65. The AUD is. Thank you.